Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about NZDUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders. So the COT data, so essentially what hedge funds and the big players in the market are doing. And we will be looking at the data precisely for the NZD. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong historical structure level for this market. In fact, this area was acting as previous support here, preceding this rejection to the upside. Then the market broke below that zone and that previous support was turned resistance here. Then we had the break back above the level and this previous resistance was once again turned support at this level. The market is in fact currently testing the level and already rejecting it to the upside. And in a situation like this, more bullish price action could be created away from this key area from a monthly standpoint. We can also notice that if we look at the pattern that the market has been creating, we can notice a very clear impulse and correction. And in general, after an impulse, if we want to measure the correction, what we have to do is take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 50% and 0.618 Fibonacci retracements lining up exactly with this previous resistance turn support, creating confluence of support at this area, which we could in fact expect this market to reject to the upside. So from a monthly standpoint, everything seems quite bullish. Dropping down on the weekly time frame, what do we see? Now, from a weekly perspective, we can notice how at the moment the market is testing a quite important structure level as well. In fact, we can see how precisely the market from a weekly standpoint has been respecting this area first as support, creating these rejections to the upside, then as resistance, creating these rejections to the downside, and then after the break to the upside, again as support here, and now again as support here. So in a situation like this, more bullish price action could be expected away from this area for the market to once again respect this exact same level. Dropping down on the daily time frame, what do we see? Now, from a daily standpoint, we currently have new structure and we will now go and identify that new structure. But before we do that, I want to go and see what we have when it comes to the commitment of traders, so the COT data, so what hedge funds and the big players in the market are doing and how they're moving their orders. And by the way, make sure that you join my free Telegram channel, which you find linked both in description and here on the screen, so you never miss new updates. Now, as I was saying, let's go and check the data. First of all, we have to keep in mind that if we're checking the data for the NZD, we're actually already checking NZDUSD because all currencies on the spot are traded against the USD. And what we can see here is that with the last reports, institutions went from having minus 19.6k net positions all the way up to having plus 3.4k net positions. So essentially, institutions went from having more shorts than longs. In fact, we had 29.7k shorts compared to only 10.10k longs, all the way up to now having a positive net positioning, so the complete opposite situation with 3.4k net positions and 19.6k longs compared to only 16.2k shorts. So clearly, institutions have been shifting their interest from the bearish side to the bullish side for this market, and they expect NZDUSD to push higher in the long run. So moving back to the technical side of this market and looking at what we have here from a structure perspective on the daily time frame, it is quite clear how we have previous daily resistance that was acting as resistance all across here, which is now turned support at this level. And from a pattern perspective, we also have a very clear impulse, and if the market will now correct, we will have an impulse and a correction. And if we want to measure this correction as we did previously, we have to take our Fibonacci from the low to the high of the impulse leg. And we can easily identify how we have the 0.32, 0.5, and 0.618 Fibonacci retracements all lining up exactly in this area, which is also the previous daily resistance turned support. Meaning that actually we have confluence of support inside of this area because we have multiple levels of support lining up in the same area of price. That is the definition of a confluence of support area. Therefore, if the market will correct to this zone, we have good probabilities of getting more institutional longing inside of this area, which at that point would further increase the probabilities of a potential push higher away from this area. So what I would expect in a situation like this if we get a correction to this area. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market during this move to the downside, at that point, I wouldn't be surprised to see a potential push higher, completing this daily impulse correction and impulse pattern to the upside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.